All right. Hey, welcome everybody. Happy Friday night. So besides this and playing chess in the evening, this is kind of what I do on Fridays for the time being, at least after hours once the kids are in bed and so on. So anyways, I like to kind of recap the days on Fridays, usually because your mind is fresh, even though it's kind of mush by Friday from just everything going on. Everything is still somewhat fresh in your mind, and it's a good way to just kind of refresh at the end of the week of what's going on, what's happening, and is there anything for next week to kind of take a look at. If you do that on Sunday, at least for me personally, if I do something like that on Sunday, you kind of have to get back into the groove, into the flow of things. So it does take a little bit of time to get back into kind of the swing of things on a Sunday and so on. So anyway, so I usually try to do it kind of on usually on a Friday or Saturday if possible. So it's a little more fresh for me. So anyway, today I'm going to take a look at some growth stocks, which are some bigger stocks. It's kind of like a typical Friday night homework for me. So during the weekend, I'm looking to set things up, and this is and towards the end of the year, I'm actually now looking at, hey, what are the stocks that could be making some big moves next year? Everybody's guess is, as far as looking at the bigger picture economically, you can always say, hey, this sector is going to do well, or that sector is going to do well, and that's anybody's guess. Really, when you start looking at heat maps and so on, and really, it's the ones that were underperforming the last little while are probably going to do better soon, right? Because most stocks are not going to go to zero. So eventually, you're kind of looking at, okay, well, which ones are going to be doing better? It's really the ones that were doing worse off. We're looking for kind of a bounce. Now there are some things that just probably will keep trending down, like Gap or GoPro or something like that. But in general, that's kind of what you're looking for, is like, good value, good stocks, and so on. So I'm just going to kick things off. If you have specific questions, feel free to ask them. I don't know how many people we're going to get joining today on Friday. Most people are probably wanting to listen to some music and chill out, but that's fine. That's okay. I like to do my homework for a little while, and then I kind of rest afterwards and play some games of chess or something like that. So anyway, let's kick things off. As usual, again, I don't recommend any of these things. It's just my personal thoughts, opinions, things I'm looking at for myself, my levels, and so on. And you can go ahead and use them for your benefit or not. And if you have questions, you can always ask them. We'll keep it more chart related, but if you have some options questions, feel free to ask those as well. Okay, so I'm going to go ahead and take a look at some of these things. I'll put the chat up there. We don't really need the timer. We're just going to get going here. And here I'm going to start kind of looking at some stocks. Right now, you won't see the thing because it's hidden behind the chat area, but what I'm going to do is I'm going to sort by, let's see, actually, I could probably move this over a bit. So what I'll do is I'm going to start looking at stuff that actually did well today, because what that's going to do is give me a little bit of an indication. And I'll show you here on this screen, but I'm actually going to duplicate this screen so I can see it on my larger screen or my other screen. So that way I can duplicate the tab. There we go. And then float in a new window, so I'll duplicate it over here. So that way I can look on the big screen. You guys can look at the kind of the recording. So that way I can have it a little wider for me. Okay, so I'm going to start out with looking at kind of the net change, and I'm going to sort it by the net change, because if I do by net change regular rather than the percentage, so I want to do the percentage because, a $20 move in Amazon or a $20 move in something cheap is a whole bigger difference. So we're going to start there. We're going to start with the net change. I'm going to go in and start running through some of these. So, and then this just refreshes my mind on like, hey, what happened today, rather than trying to get headlines, because headlines are pretty much useless. Remember, price happens, then the headlines and news comes after. So I'm trying to get an idea of what the market did and what are the strong stocks, especially on a down market, like when we had like the S&P right here moving down pretty significantly. Again, it's weak. It's coming off of this resistance level. It doesn't mean it can't bounce here. I'm just saying, like, when you have a weak market, what are the stocks that are actually doing well in a market that's acting a bit weak? And that's kind of what I'm looking at. And the big question I ask myself is this just a counter trend bounce for the shorter term to later sell off again? with these stocks that actually that are bouncing right now, like AMC right now. As I look at it, and I looked at it the other day, if you saw the video, so it's bouncing, it's trying to bounce off of this level. And is it for the shorter term bounce, or is it really sustainable? So for me, depending on if I'm looking for the trade, if I'm looking for just a trade for a shorter term, yeah, this could be a pretty good trade. And you might be able to trade it up to here, and then it might sell off and pull back. But that's not something I'm really interested in. $30 to go in this, and you're going to probably risk about that much, right? So you're risking about this much to make maybe about that much. And the reason I do this and say this is because you got to give it enough wiggle room to get it down all the way to here anyway. So, for the shorter term, it looks okay, but for the longer term, it's not one I would really look at. And again, you got to look at multiple timeframes, and I have other multiple timeframes here listed. So anyway, so AMC passed. So I go through some of these quick. This is bull 3 times. I don't usually trade 3 times ETFs. A lot of them compound, and they're good for like hedging, day trade, couple days, maybe like a week. But usually I try to avoid them. A lot of people get burned when they do 3 times, like TZA or that kind of stuff. GQQQ, you name it, like anything 3 times ETFs. I mean, you're just really leveraged up. I mean, if I'm dealing with options, I'm already leveraged up. So why would I leverage up again on top of that? So it's usually a tough battle. So I stay away from stuff like this. T-Dot caught my eye right here. This was interesting. I scanned it earlier, but I didn't get in it. I got into some Zoom today, actually, nibbled a little on Zoom. But here's what I liked about this one. There was that past breakout. This was where we broke out before, and we've sold off quite a lot. Now the volume was heavy on this sell-off, so I see that we had a break here. The trend is still to the downside, but now is it the time to start nibbling? Could I start nibbling over the next, like if I got earnings coming up, and I'm just rambling and talking to myself here so you get an idea what's in my head. So if I got earnings on 2/23, I might have the ability to be in that trade about, 2.5, 3 months. So in the next 2.5, 3 months, can we consolidate and then break up? That's kind of what I'm looking for. And I'm usually looking for long-term stocks, meaning longer portfolio or to the upside bullish, because stocks typically go up. You can also go up forever, really. If you're shorting things, it's for a smaller time frame, right? When you short, it's smaller time period. So anyway, so this one looks like it's got some potential. We'll see next week. It's just the first bar, so I do think it's a little early. The volume came in. It was pretty nice on a down market. This is nice. It could be starting to roll over here, so we'll see. I am actually going to put this on a make a new watch list. We'll call it, let's just say 2022 growth. So I will put that in that. Let's see, there it is. Okay, so we'll put that in there. So this is what I do. NVAX, Novax here. A little bit extended here. And I look at the volume, and I also look at how choppy the chart is. This one's a little choppy for me, so I don't really care for it. It's not one that I'm really that keen on. Carvana, I was watching it. This one I would more short than anything. So any bounce here, I would probably short, because now it's starting to break some critical levels. So if it gets down here, bounces, I'd probably look to short. So I wouldn't call it a growth company. It is an interesting trading opportunity, but I wouldn't look for it to, the volume's just coming in. There's a lot of selling pressure. It to me looks like it's actually more of a short. So any bounce, I would actually more likely to short. So this bounce, if it comes back to 250, I'd probably say it's a good opportunity to short it again. That's just me personally. Zoom, I did get in Zoom today, just nibbled a handful of contracts. But I'm going to start building a position on it. And yeah, that was a live account. So this was one of the few I traded, along with some Moderna and stuff that I just had positions on already. So yeah, I kind of looked at this one already. So I know this chart in and out. So we've created lower highs. So I'm thinking, okay, because I use all the Zoom meetings for all you guys and the training. So I'm looking at kind of Zoom here. I'm saying, hey, it could be an interesting bet for a shorter time period. My stop would be right under this a little bit, because I notice it's basing slightly for a little while. And as I started to kind of break out here, I got it like when it was already, it was already plus $9 or something like that, but it went up 17 today. So I still made a bit on the run. But I didn't take any off. I'm slowly going to build it up. So if it starts pulling back into the 180s, I'll probably add a little more, because as I always say, you're trying to build a position over time. So I do have this one already, because I also looked at it as the possibility of this ABCD pattern actually, let's look at it on a 2 or 3 day so it's easier for you guys. I looked at this ABCD pattern. If this ABCD pattern right here that I have is complete, right? So I have A to B, B to C, C to D. It's time for it to do something different. So it's one I'm nibbling on, but the volume is still going to be weak, but I'm nibbling. These are the tougher trades, but it's the tougher trades that usually pay out. So I start slow and then I build into it. If I get a second day follow through, I'll add. If I get a third, eventually once I start seeing it roll to the upside, then I really add a lot more. I go heavier. That's kind of just my process. So you can see right here, this one too, it's the same thing. They kind of go sideways and then start rolling. So this one's kind of interesting, so I'll put it on the list as well. I'm looking at some of these support levels and resistance right here. So you can see some of these stocks are still doing fine in a down market, right? The whole market's panicking, but if you notice some of these things, they're doing just fine for now, some of these, but we'll see next week. And that's why I wouldn't add heavy right now, because I want to see what the market brings me a little bit later. So this one's kind of toast. I don't really care for it. It's charts down. Pen gaming, no, definitely not. Maybe, but no, not for me. Too much drawdowns over here. Negativity, it's not kind of my thing. Roku, I've been eyeing, and I didn't pull the trigger on it, because I saw this was too much of a gap. It filled. So again, I probably should have got in here, but with the market being a little toasty, and Roku, I failed on it a couple times before that I told you guys about, I think. I lost it here, so I'm a little burnt on it. But we will maybe try soon to start nibbling some positions. Even though today was a good day, I think this still has potential, for a snap up, maybe at least to the 300 to the 300 or so. And that's where, it's definitely one I am eyeing, because it's quite oversold. Okay, so there we go. Put that in the growth. Actually, let me switch the watch list over here. There we go. Now I can just drag them over there. Okay, so next one, T-Doc. We already looked at it. There we go. GME. This one, people, this was a lot of retail stuff. I don't really care for this one right now. There's not much going on in it. It's just moving sideways for me personally. There's nothing happening. I mean, you could look at it on a day-to-day basis and you could still trade off of it, but that's day-to-day, 6.5 hours. There's not, you can't go too large on 6.5 hours. So yeah, I could pop a bit here. We'll see. There's some resistance in these areas and support, but it's short, could be a short-term bounce. Again, I wouldn't, it's not my kind of thing. Edis Medicine, so a lot of medical companies. I already got Moderna, handful of shares there. Lemonade, this one caught my eye as well. So it's coming into some of the lows that it had in the previous year. It had a huge run over here, so this was pretty nice. So I wonder if it can do that again. A to B, B to C, C to D. My one concern is that a downward trending stock like this, that's kind of new, could be a bit of issue. If anything, I would do it super lightly. It is one that I could keep an eye on it. I don't know if it would be like a huge growth one though. For next year, we'll see. It's just, could be one that's failing, could be hopping up to 60 and then again failing further. So that's just my thought. Peloton, I'm waiting on. This one's got so much potential the reason I say potential is because it's got a lot of volume. With a lot of volume, there's a lot of shares and a lot of support at different points. So this is a huge breakout. It came back to that breakout point. So if people are still in love with this stock, this could be good. Do I know how panicked people are? No, I have no idea, because there could be people up here panicked where if they get back into like 70, they'll dump the stock. So that could be overhead supply problems. That could be some issues. So I might have some resistance right around this level of about 80. That could be a problem. But for now, it could be one that's, I'm watching and waiting for it to roll. I'm waiting for this to go with the market. So I don't want to be too early, because I jumped the gun. Like, let's say I jump the gun, I get in like right now, and then the next day it tanks and goes under this, and then, oh man. But it is one to keep an eye on. So again, I'll put it on the list there. Okay, Trip. I've had Trip on my list for a while too, because, once the Trip stuff happens, and you can see like we're coming right into this support. I just don't know if any of the Trip stuff's going to happen yet for this next year. Just economically, people will think of these reasons. They'll tie the reasons to you know, coronavirus, this and that. For me personally, I don't really care. From a trading perspective, it doesn't matter. But a lot of people do trade off the reasons, and you're trading people's perception, not necessarily how well the company is doing. So will people put their money on the line? Because even if the company's going to do poorly, but they put their money on the line, then the stock will still move. So in my case, I don't think people will put their money on the line right now for this one. It's one I wouldn't mind keeping an eye on for just an alert. I think I have one set on this one on the trip. Let's see. Yeah, I already have one set. So yeah, we got one set there. And let's see, there's trip. W is toast. You know, it's breaking this critical level. So we're breaking down right here. So that's not good. Very bad. We're not doing it on huge volume yet. So if that picks up, that'll be huge problems. It can still rip back up over here and be fine. Because sometimes they'll draw down for like 2-3 days and then they snap back. So it is possible. But overall, like, you know, 60-70%, it's now cleared that level, which means it's more difficult to get back above it. So I would say this one is done for a while. And you can see how big of a nasty move this one can get. So this one's tough to trade, I will tell you, just with the way it works and moves. So I'd look for a lot lower level prices on this one for now. Okay, Dkng I've also had on my list only because it's a popular stock, not that I care about the gaming side of stuff. Again, the reason for me is doesn't really matter or relevant. So here, I'm just kind of keeping an eye on these levels, as you see right here in this level. There's the lows over there. So really, I do want to take it down to the lows. I'm not sure why I put it to that level. Maybe because I had a lot of touch points here. But the lows is kind of there, and you can see it came back down even further beyond that. So if I bring it to the lows, right there, yeah, it's still within range right there. So now I'm just looking at the daily. It's still acting very weak, and I'm not seeing any kind of rolling effect yet. I wouldn't jump the gun yet. It's still too early for me, but I know I have an alert set on that one. ARC, this one is moving well today, and I like this basing right here at 90. It's a nice round number. A lot of people like those psychological levels. They also have stops and alerts at those levels or within like 3 points, right? Especially the day traders, some swing traders that like have like a 5-10 cent point level, and then it's like boom, it'll trigger one way or the other. So I do like it at that zone. If I look back at the other level, it comes into about right here. So there's your support and comes in. So and the good news about that one actually is it doesn't have earnings. So I do like it from that point of view. So from a pullback standpoint, it looks okay. Groupon did okay today, but I mean, the stock's just been underwater. I mean, it's just been going down. This is what I'm concerned about for like Lemonade or like those stocks. It's just like anytime it makes like highs, it just continues to run down. I mean, you got this downward channel. I mean, that's it. That stock is done for a while until they do something different. I mean, the company did fantastic overall, and I've used them quite a bit, but you know, gifts and things for people. But overall, just stock wise, it's not as loved. Anyway, okay. Let's see what else we got. Hood, yeah, this one's toast. They asked me to sponsor them before, and I said then they saw one of the videos and they said, oh, okay, we understand. So I said no, obviously. I don't know if you know, but Robinhood does it based on order flow. Like I was talking about this, based on the income. Just so you know, if you are trading with Robinhood, I don't know how it is now. I haven't kept up with them, but I know a lot of their money was made by flow. So what happens is you get order flow. So like, let's say there's 3 computers that are trading, or 4, and you put in a limit order. Even if you put in a limit at, let's say, $25, okay? Well, at different brokers, the flow you might have been able to get it for like $24.10. You might have been able to get it at, you know, this one trades at 25, this one's at 24.65, and this one's at 23.87. So in some brokers, what they would do is they push you to the best order, the best fill rate. And Robinhood, even if you set a limit of 25, they will only funnel it through this broker. Like, this is the only one you can go through. And even though you could have saved like $2, right? That's a big spread, but I'm just saying like $2. But let's just say you saved like 20 cents per share or 5 cents a share, multiply that times 1,000 shares and do that across, 100 trades a year or something, or 500 trades a year, depending on how many you do, it starts to add up. So anyway, point is the order flow sucks and people are recognizing it. The platforms, you trade options on it and you come to me, I'm like, you can't trade options on this thing. It just doesn't make sense. It's for a guessing game for options. It's not really the appropriate option trading platform for serious people because they just don't have the tools. So anyway, but they're fine for longer term investing and buying stocks, a little bit at a time and just buying a little bit here and there. Uber caught my eye. Here, let's take a look at this. What's going on? So I know they've been moving the last couple of days here on the bounce. Volume's coming in. This probably will get into here, and then we're going to see what's going to happen in this level. So I don't know if it's going to be a rocket stock for 2022 or anything, but but it could be one for a trade to take a look at. Let's see, Zillow, Fastly. There we got this one. I have in a real account, and here's the paper account. I also have, just as a simple cheap trade, like $39 worth. What did I put on this? Probably a vertical and CLH. Yeah, so it's just a simple vertical. So it's just grinding for like January 21, just letting it grind up, see if it does. And then, risking about $130 to maybe make, half of that. So maybe, $70, $80. And then we'll see when it gets into here with a little bit of theta and take it off at that point. Just kind of, again, spread your money around. That's kind of what I'm looking at. DDD, nothing there. RBLV, Revolve Group. This one's toast for a while. Right now, major trend line broken right here. Volume picking up. So we'll see. We'll see if it can come back to the 50 and kind of hold. That's kind of what I'm looking at right there, but it's not really catching my eye. Let's set an alert. Let's see what the options RVLV. What kind of stocks are you guys looking at these days? If you have any, let me know. Curious. Moderna, yeah, I've traded some Moderna today. Lots of Moderna. I think I put on like 15 different positions on Moderna today because it was whipping me around. Okay, let's see what the options. Very light open interest on this. I probably wouldn't trade this one. Yeah, we're going to get to Moderna here soon, I think, Ray. So let me just write down. I'm at FedEx right now, and then we'll do Moderna real quick. Yeah, so I traded this one quite a bit today. So yeah, so I'm looking at Moderna. There's two kind of main price levels I'm looking at. Is kind of this upper high of 466, 480 really is kind of, 495. I mean, it's right there. That range is kind of one level, okay? The other key level is right here, that level. That level is 225. So that stock is right now moving sideways for a little while. So we will see how that plays out from a longer term perspective. I mean, this stock is still holding up okay. It is starting to break a little this level, but it could just be some sideways consolidation, just like we did before, to be able to break higher. So, we'll see what happens here. But overall, we got extended over at the top, pulled back a bit, and now we'll see it's grinding up. So I do have some long positions on it, right, at lower levels here and some at higher levels, different spreads on different things. Yeah, Moderna, I took 122, 400 call. Okay, so you did a single. Oh, you did out of the money. Ooh, okay, you're gonna have some theta burn on that single. Because you did 121, well, 122, yeah, right here. January, single call, Moderna. So as I look at this, and you did the 400s, yeah, you'll have some theta burn on this one, for sure. Because out of the money, you'll burn some theta, so just watch out for that. But, as long as you manage your theta, you're fine, or if it explodes, that's fine too. Okay, back to FedEx. That's where I was at. Or, oh, you got one more. LRCX. Okay, so, let's look at this one. Daily volume, 1.6 million. So it's a lighter traded one. I mean, overall, this stock's been moving well. Lamb Research Corp. Let me see LRCX, what the option volume is. LRCX volume's only 1 million, so, but the options are much more liquid than the other ones, so actually I don't mind it. Let's see here. Okay, so this one moving up well here. My little bit of concern, A to B, B to C, maybe C to D, I don't know, like kind of maybe a little stretch, market weak. So can we have a little problem here? Yeah, we could. Right here, we'll see. Maybe volume slightly picking up, nothing major, but it is one I would probably peel some profits on. Here is another support level. I mean, it's a $700 stock almost. So yeah, it'll whip around a bit. I never traded this one, I don't think. So I don't know how easy it is to get in and out of the position, but you know, paper platforms don't always justify that. But yeah, so I mean, it's got some support at 656, but I'd be cautious with this run for me personally getting into the position. I just don't know the stock as well. How do you manage the theta? I usually just hold it like a lotto. Yeah, normally you don't want to do that. Yeah, there's a lot of things you could do when it comes to singles, but anytime you're dealing with out of the money singles, like look, if you really want to know how to deal with singles, like how to really play singles the right way, we did a class on this specifically. Hey, good evening, Kevin. We did a class on single options right here, right there. Now, you typically have to do more contracts to be able to make it worthwhile because you have to have another spread to offset the theta. So if you're just dealing with one contract, there's not much you can really do for that theta unless you convert it to like a vertical. But then with a vertical, you don't get that explosion effect that you do with a single. But if you really want to learn how to trade singles, this is the right class right there, where we look at kind of selling other spreads to get positive theta trades. So that way you could buy a single that explodes and does the right way. But yeah, usually you know, I don't mind buying things out of the money for singles, but usually not just by itself. Usually I have to pair it with something else because the theta burn is just huge. I mean, you're giving up. It is like a lottery for most people, and that's why a lot of people lose money on options, because they're just putting a lottery ticket, but do that a lot of times, and you know, you're losing a lot of money over time. So instead, what most people do when they're trading this is they offset it somehow with some positive theta trades to be able to make that up. So that way it isn't like a lotto. It's more like, okay, you take a cheap shot, and maybe let's say that costs you $1,000 on that lotto, but maybe instead of doing it like a lottery, instead of $1,000, it only costs you $200. So would you rather lose like 1,000, or would you rather lose like 200? So that's the way I look at it, is let me take small lotto hits rather than, you know, big lotto hits. So in this case, if it's like a $200 call option, you might only actually, let's say you hedge the theta a bit, then maybe you only waste 50 or 75 instead of a 200. So again, 60% of it you could actually make back from doing other things. Okay, back to FedEx here. Hey Kevin, how you doing in Florida? It must be nice and warm. I think you're in Orlando there, aren't you? I was in Bradenton, right near Longboat Key, Anna Maria. That was a nice place. So yeah, Twillo, I like looking at Twillo right here. I think it's got some potential. You know, a lot of people were looking at it. It's a little tougher to get filled when I did the trade a bit. I will put it on the list later and resort it. I know it's a little tougher to get filled because the spreads are wider. This Beyond Meat also is one that's kind of been toast for a while. I don't know where we'll see if it rebounds, but man, this one is, let me see if I have an alert on this one. B1, no, I do not. Let me just set one up while I'm here. Let's set an alert for the 21. Why don't we do that? And then we'll reevaluate. Okay. Depository shares, I don't care about. Moderna, we did. Pinterest, I have an alert. Yeah, it's starting to set up something interesting here. We'll see. Maybe by now we're starting to get into some good value. I mean, this stock has pulled back. I mean, it's in the 30s now. It was way up here, almost at 100. It's pulled back since the highs. How far down are we? What do you guys think? Almost 61%. Wow, that's quite a lot. Okay, so 61% down. So yeah, so it tried to bounce here. I did try and attempt this, but it failed for me. So, you know, I got stopped out. So I will probably reattempt it here soon. And let's see if I got an alert here on Pinterest. Yeah, I do. Okay. So we'll put this one also on the list there, just in case. And then we got Peloton, we did. Roku, no, that was on the other list. Here we go. So these are the ones that have been moving well today, right? On a down market, you think about it, it's not bad, but you can see a lot of the stocks are just like sold off quite a bit. These are the ones that are doing well. CCL, Carnival, PLTR. This one is one that a lot of people were watching also here. It's kind of the lows coming in maybe sideways. I don't think it's going to be a hot 22 stock, but it could be a nice trade because you do have some, you know, 20 to 30 range. So you could play that range pretty well, and you're kind of at that bottom of it. I don't think it'll be like a hot stock, but it might be all right for later. Let's see. Do I have one on this one? PLTR, no. Let me just set a quick alert just in case. I'll do the 21. Why don't I do when the moving average, let's see, let's do it this way. When this average crosses over that average. Well, let's see. Could do that. I wonder why this one is moved over. Huh, weird. Okay, because this one related to price history, yeah, but what is this one? Main chart. Yeah, main chart. Let's make sure, just double check. I better make sure there, because sometimes if you don't have them linked up properly, that average is off. There we go. I don't think it matters, but I just want to be sure. Price history. There we go. So now that should be correct. There we go. They're all in line. I like that. Very clean cut. Okay, let's save that chart so I don't lose it. Okay. If doing single options, Joel asks, how far from expiration is it better to avoid time decay? If you're doing single options, well, the faster, you know, the closer you are to expiration, the more it's going to, you know, kill your theta. So it depends what risk you want to have. I'd say a minimum of 25 days. Anything under 25, you're starting to really decay very quickly. So 35, 45 days. And usually what I say is if you're looking at a spread, like let's say you're doing like here's for easy number's sake, 40-day spread, multiply that times 20%. That's about how long you should hold that spread until that time decay starts to kick in really quickly. So here, like, let's say, again, it could be like 15 to 20%. But here, like, you know, 2 times 4 is about 8 days. After about 8 days holding a 40-day trade, it starts to kick in. It doesn't mean you can't hold it longer. Like, you could hold it for 15 days. You could hold it for 20 days. It's just that it really starts to kick in after about that range. You know, you could do longer days. Like sometimes you could do like a 60, 90-day single. You're going to pay up for it. If you go beyond 150, I wouldn't go beyond 150 because then what you get is the volatility problem, and a lot of the market makers hate it. So if you're doing leaps, you know, there's a lot of people that talk about leaps in the trading world. I find a lot of them, you know, I've seen videos that people send me, my coaching students, they send me the videos about guys trading leaps. But the problem with leaps is they got to offset the volatility hedge. And when you offset for the volatility hedge, a lot of the market makers just hate it. And they hate it because there's just way too much volatility that they have to deal with. So they have to do that with stock, and it's just hard to cover it. So I don't usually deal with leaps. Instead, what you might want to deal with is just more along the lines of, okay, if I get a 150 and I want to do like a 300-day, then I'll do another 150 when this one gets down to like 60 days or something. Just use 60 days as your baseline of 0 days. Okay, Ray asks, is there any reason as to why you set the alert when 10 crosses the 21? Because here's the thing. When the 10 crosses right here, and it crosses, that'll give me one alert, right? And that'll say, hey, it's moving. And you'll see what happens is that in certain stocks, let's just go to one right here, like right here in Pinterest, it crossed it, I got the alert, right? And I could have got in it, and I did get in this one, not because of this alert, but for a bounce reason. But if you get this alert, let's say, okay, you get into the stock, but it didn't have enough time to base right here. There wasn't enough time to base, so you could get into the stock. So let's say somebody got in it, but then it rolls back over because that stock's not ready for it. So when the 10 actually crosses the 21, or you pick your duration, whatever you want. I mean, it's just an alert. It's just a way to set the alert. Again, it's just, there's other ways I could have set the alert, but I'm just like, hey, let me just take a look at, because I don't have time to look at every stock. It's just like when the alert comes in, boom, 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 right? So in this case, I'm waiting for that crossover, and that crossover example is more of, like, let's say a stock is, let's just find it when it's trending down. So here it is, it's trending down right here. Here's a downward trend. Here could be your first alert, but you wouldn't have got in it. Okay, so the 10 crossing the 21 is a slower alert. So now when it's crossing is actually more like right there. So my alert actually would be somewhere in this area rather than the alert of over here, or the 21 of day alert would be like over here. So it's a little bit of a later delayed alert. That's the way. So it's like if I want a delayed alert or if I want a more aggressive alert. So it's like, do you want to be more aggressive on the stock, or do you want to be less aggressive on it? So for me in this case, if I want to be less aggressive on it, or like I want to be more cautious on it, I'll wait for it to actually cross. If I want to be more aggressive, like start nibbling on a larger position size, then I might get the alert a little sooner and then take a peek at it, because I know it's also could be a faster moving stock. With faster moving stocks, you'll want the alert a little sooner, because they'll hit the alert and then they'll already like moving so fast by the time you even get to the trade. So that's just kind of the way I look at it. But anyway, the alert thing is just like whatever works for you, right? It's not anything like special or amazing. All right, where was I? Probably somewhere PLTR right here. So yeah, so I've got an alert on there. Spotify, I think I have an alert on here, or maybe not. Oh, not yet. But let's set one. Do you ever use the trend reversal signal based on the weekly? What do you mean exactly, Ray, by trend reversal signal? Are you talking about just the stock moving up, gapping up, and then reversing? Or are you referring to something else more specifically? Because you capitalize trend reversal signal. Is there a specific like signal that's named as a trend reversal signal that you're referring to? Like a specific name designed by somebody or something? So this one, I'm just going to set an alert based on the trend line here. So this one's will be a little different because I can see there's basing a little bit over here. This one's oversold quite a bit. I did short this one a while back for a little bit, but I got out of that a little while ago. Okay, D-Dog here. Let's see. This one's kind of coming off the support. MGM. In TOS, they have a trend reversal indicator that gives signals. I don't use anything TOS for alerts. So I use Thinkorswim for putting trades and doing the trades. I don't use anything for signals. I use actually the TC2000, so I don't use it simply because I find it makes the platform a little more laggy. I believe it's based on moving averages. I do not know which one. Yeah, a lot of the times they are all a lot of the signals are based on basically, you know, price and volume. I mean, that's really what they're looking at. The one alert I will tell you I do use on Thinkorswim is sometimes the, like over here, which you can do is go in and there is an alert that you can set on for kind of like the deltas and stuff. So when you go in and you go to this trade, and then what you can do is create an alert. So like, let's say I've got this delta of 42. So what I could do is create an alert. And then what I can do is then do it based on mark, bid, ask, or delta. So when the delta is above or below, that kind of stuff, I'll set an alert on that. because I want it specific options based, but not necessarily an alert on you know, charts. I don't use the chart alerts on Thinkorswim. Hey William, welcome. How useful do you find the volume profile indicator? How useful do I find the volume profile indicator? Okay, you're talking about the volume down here at the bottom. This one. If it's the one in yellow, if that's the one you're talking about. If that's the profile you're looking at, or you're talking about the profile of the way that it moves, then yeah, I mean, I definitely look at volume for sure. You have to look at the volume to really just evaluate and understand how that stock is behaving. You have to see how it's moving, especially on longer term charts. It's fairly useful on weekly charts. Like you could see the volume profile here. You know, you're looking at it. How is it increasing? Is it picking up speed? And if it is, it's like, okay, is it something I want to get into? So definitely it's a useful indicator for sure. In my case, Daku, you know, I struggle trading Daku with the option side, at least. I don't know, you guys trade it. This run was very nice. I didn't capture it, unfortunately. But here, when you look at Daku and the sideways action right here, you know, I was trading it around this, like all throughout here, I was trading it a little bit, seeing if it would kind of pop again for a second run. But the options are very, excuse me, very tough to actually trade. The spreads are a little more difficult, and getting in and entries are very difficult. Kind of like Etsy for me, it's just more difficult to trade that stock. I don't know if this one will actually, you know, be a growth or amazing company from a stock perspective in 2022, but it did have some explosive moves right now, and now it's way at the higher areas. It's the one that's on the side. Oh, okay. You're talking about yeah. The volume this way. No, I don't use it. Yeah. So if you're talking about the volume profile, the sideways volume. Yeah. If this is the one you're talking about, where like it gives you like more volume, like here and here. This also has it. I just don't use it personally. I feel like it clutters my chart a little bit more. I look at the volume directly relationship there, and I can actually see that volume at those price points this way. If you like it, you use it, that's fine. There's nothing wrong with it. It's just looking at the picture a little different. That's perfectly fine. Again, I don't knock any indicator. It's just whichever one, you know, whichever shoe fits for you. They're all very similar. It's just the picture's a little different. That's kind of what you're really looking at. So here, Weight Watchers. This was, I think Oprah owns a bunch of this shares. So this one whips around. I don't really care for it too much. Okay, so I think we're kind of getting to the end. After a little while of doing the net change, I start to kind of pick up some speed. And then I start looking like VXX. You could see like this Expedia Dash. Again, this one's kind of toast. So here, Autodesk, Best Buy. I actually, no, Bed Bath & Beyond. I shorted Best Buy the other week after earnings. There, TNA, American Airlines. So I don't know what's going to happen with these airline things. Good luck to them. I hope they do well, because then you can actually travel. Okay, Snow. This one was very popular. It's pulling back a bit. I don't know if it'll continue. We will see. You've got the highs. You got a kind of a double top here. So it does have a problem around 400. So pullbacks might be good on the by the dip, but a lot of chaos here. So but it's not a clean support kind of resistance levels yet, but it is one that's interesting. Splunk, Yelp, nah, nada. Burlington, Coat Factory. By the way, I'm switching between daily, weekly, and sometimes I'll hit the monthly, and I also see it up at the top as well. Kohl's, Gap, yeah, this one's toast. It's kind of like Groupon and GoPro. A lot of the G stocks are bad, right? GoPro, Gap, Groupon, all the G's. Stay away from G's. Oh man. Win. Yeah, Win is not doing so well. Steve Win. Okay. Here, nothing there. Wolf, I did see something interesting on it. It's grinded really well right here. I mean, this run was phenomenal. But now you're trending back down to this. So it's like, yeah, if you got into here, that's why you always take some profits in the strength, just a lesson learned, I guess. And then here, it comes right back. So this is where it fakes a lot of people out, but this beautiful breakout. So congrats to those. But yeah, it's not quite a double top, but we'll see if we'll see if this gap holds or not. If it gets into this gap, then it'll probably fill that gap here soon. We'll see if it'll sustain. Cloudflare, this one's been doing really well in the past as I was looking at it. It's been doing really well, but it's got a little recent pullback, so we'll see if it can start holding here. But I do like it. I'm gonna set a little bit of a faster alert on this one, so let's do this, just a quick 10-day alert, moving average, just to get an alert in there somewhere, and then we can reevaluate it. Altria cigarettes. Okay, so yeah, not my thing. United Airlines. Okay, I'm kind of done with this round. So then what I'll do is let's go in and see the biggest losers here. Okay, so let's go the other way. Oracle, Toast, General Motors. Okay, this one was doing pretty well not too long ago because we had this massive ABCD pattern right here. And it completed that A to B, B to C, C to D. So there's your A, B, C, D pattern. We're pulling back now in a big way. What did it have? Earnings recently, I guess, probably. Big volume, so we got A, B, C, D. So yeah, nothing crazy for me. But I guess it's probably riding the wave of Tesla and stuff like that. And all these motor companies people are like hyping up about. Eventually we'll have flying cars, and that'll probably be like another cool thing. NetEase also pretty toast. The chart's a little dirty though, so Wells Fargo, ooh, that's not good. Yeah, I mean, they stole a lot of money from people and did a lot of fraud, but let's see, Bank of America. Yeah, the bank didn't do well. How about Goldman Sachs today? No. So, okay, banks are not doing well, even though they were talking about all the good stuff, so supposedly. So if that breaks, that'll be an opportunity to maybe short that one. Because if that, will set an alert here just to see. But yeah, that doesn't look very good. It's at the, it's near the highs. It's starting to act a bit. Let's see if that volume will pick up. Selling pressure, and it's not even earnings. So, and the banks report first. So the trade, unfortunately, with this is you're not going to have long in the trade because the earnings will come out. So anyway, I'll take a look at that later. Starbucks. Ooh. Not good, not good. Okay. Why is there selling so bad? The earnings are at 125, so it's not earnings for sure. What does the news talk about? Starbucks. What are they saying? What's the reason? Not that we care. Starbucks stock. This sometimes for fun. Why Starbucks stock got knocked over today. So that's kind of funny. Oh, let's see what they say. Why? What happened? What happened? What do they say happened? A lot more sellers than buyers is what happened. All right. Friday morning, David, analyst, downgraded from outperformed to neutral. Okay, and cut his price target by 10. Okay, so what? Okay, although Tarantino optimistic about the company's longer. Okay, sure. Now what? China's already, what does this mean for investors? Doesn't mean anything. Okay, so basically somebody downgraded and it's not necessarily why. That stock was basically primed at the highs right here at resistance. That's fine. You already saw the selling pressure come in before. Here's the reason. Even though he downgraded today, I'll give you some insight on the news, right? Even though he downgraded it today, they already knew it was going to be downgraded. Look, I'll tell you why. The big money, they talk, right? They talk on the phone. You think there's not like communication by phone? No, they all know one another. So there was already selling pressure before the market was already weak. So they were already trying to dump the shares ahead of time. They talk amongst each other. Like, I don't like this stock. It's like locker room type talk, you could say, or just like you're just talking in general to your friend, right? If like you're part of a company group in Home Depot, you're going to talk to other Home Depot people for dinner? You're going to invite them to your barbecue, and they talk about it. So probably there's already dumping of some kind of shares here. Also, it was just at the highs. Anyways, point being, it wasn't just a reason of that. But point there is like, look, they sold off. Doesn't matter why, more sellers than buyers. That's what the news thinks, but it's not one reason, right? There's thousands of reasons of why that stock's selling off. But anyway, I was just kind of curious what they were saying. Only because I think this was mentioned as one of the top growth companies for like 2022 on one of the news things that somebody sent me. So that's why I was kind of more curious about this one. William asks, do you have a list of stocks that kind of move sideways that are good for iron condors, or do you not really worry about the sideways to pick your stocks? No, William, you can't do iron condors based on which stocks are moving sideways, because they're all moving sideways at some point. Like what you'll have is, if you look at just a trend of a stock, you'll have a lot of sideways action. So here's what happens in a stock. It's got those phases, right? You'll have sideways action, then you'll have explosion, then you'll get kind of consolidation, then you might get a pullback. So in those times, let me make it pink, you'll still have areas where there's sideways action. It's in the same way as a long investor. Sometimes as a long investor, those are the bad spots, and these are the good spots. So you'll have different points where, depending on what you're doing, some are the good spots, some are the bad spots. So if you're doing an iron condor, like let's say I'm doing an iron condor, okay, I'm going to do that iron condor. If you're doing it weekly, I'm going to do it every week. If I'm doing it monthly, I'm going to do it every month, all the time. But I just might do it a little different. If that stock starts heading higher, like let's say it starts heading higher, I might do it a little different, and I might do it like a little bit more of a bullish iron condor rather than neutral or non-directional. By the way, guys, check out the Discord group we've got going on coming up soon. I'm starting this here, and that way you get announcements for other things as well, for like when we go on live and so on. I just started it. I know some of you guys are on Discord probably. So if you're not, it's kind of like a chat room type system. We're not going to be doing like, chatting back and forth like all the time or anything like that. I just don't have the capabilities personally to be able to do that. But what we could do is post questions in there. And then later on, as we get to the videos and we'll do some more live streaming, I could answer questions directly from there as you accumulate things and questions. So anyway, check that out, and feel free to give a thumbs up if you haven't had a chance already. All right, so let's go in and take a look at the next couple here. But yeah, iron condors, you do them all the time, right? Unless, just as a side note, look, the time, like when the volatility or the VIX gets like over 25, or maybe for some people 20, depending on when you're like scared, then you might take a step back and say, hey, I'm gonna wait till that VIX level calms down a bit. Or you trade lighter. Like if you're trading 10 iron condors, you might do like 2. So you just go like lighter. But you're doing them all the time because there's always something in the market to panic about. Like if I pull up this news story, like as one of the guys I always followed and learned a lot from, Dan Sheridan, who not a lot of people talk about, right? All the other people, like they go in and they see all these young guys now talking about stocks, but really the old guys with pretty much no YouTube views and no followers. I mean, he's got followers. He's the guy who taught Pete Najarian and John Najarian and all that. But I like listening to him. But anyway, the news, he always says there's always something to be scared of in the news. So stock market selling off. So why do you think a lot of the videos on YouTube, a lot of them are negative? Why stocks are selling off? Why is the market's going to tank? A lot of it's for viewership. And granted, I have to be able to create some of those things too, to be able to attract people, because without that, you can't get the people to click through to actually listen to the appropriate content. But once you get into the video, you see that, to me, it's like, so what? The news, yeah, it's selling off, and big deal. Dow tumbles more than 500 points. At the end of the day, it's like, look, you gotta, one of the things that was always struck my mind is one of the guys I learned marketing from, he always said, I gotta be able to attract people when you're trying to find or dating a relationship. What do the guys and gentlemen really want? They want pickup lines. But the reality is that's not really what makes you a great human being. Like a lot of the women or partners, they might be just looking for a good quality human being. But what do the guys want first? They want pickup lines. So he's got to be able to sell the pickup lines first to be able to get that guy to convert to just be a normal, humble, good quality person. And it's the same thing here. Like, look, it's the negative 9 out of 10 headlines are negative. They're going to sell more with negative headlines. It's what attracts people. It scares people. Very informative watching you. Rich, think out loud, picking something up every session. Yeah, no problem, Rich. Yeah, I'm happy to do it. Yeah, Christmas time is a little bit lighter for me on coaching and mentoring. I don't do as much of it because a lot of people are on holidays here during December time. So I just have a couple of people I'm working with one-on-one. So I thought, you know what, let me try this on a different channel and see how it goes. And if you guys like it, I might do more and more of it. So I'm just testing some waters out with a few new things here. But it's definitely a lot different, right? It's not, when you're looking to do like day trading, a lot of people are doing fast, quick things because people get attracted. Hey, I made $300 day trading on this one trade, or $500. But look, you can only make so much at 6.5 hours. Stock only moves, maybe $2, let's say, in 6.5 hours, when maybe in a month time you can make $45 on that same stock and less work. So like, even if you made the same amount of money on both of them, let's just say do this one, you got to do work every day. So, and it's more frustrating. You got to be at the screen all the time. So think about it, But again, it's not for everybody. It's like some people want to day trade. They have that A-type personality. But if you want to do that, trade lighter shares, trade less, and just day trade to keep yourself busy. And then, thank you for your calm clarity of thought. Yeah, you're welcome, Craig. Thanks for stopping by. Yeah, so you can see tech sell-off. There's always, excuse me, I'm talking a little bit more now here. Let's see, where are we at? 56 minutes. So yeah, we'll probably wrap it up soon. But yeah, there's always something to like worry about, right? But if I was to find a news headline to always worry about, it's like, man, then I probably wouldn't trade like half the year. So there's always going to be someone that, there's always a spooked by tech sell-off. Yeah, spooked by tech sell-off. Maybe they're spooked by the government. Maybe they're spooked by, I don't know, coronavirus. Maybe they're spooked by because they don't have money in their bank. Maybe they're spooked because they just lost their job. Yeah, I mean, a lot of people are spooked for a lot of reasons. My reason is different from their reason. Their reason is different from other reasons. So some people are spooked by the government. Some people are spooked by a lot of other things. So it can't be. But with the news, they try to tie one thing to another. Plus, you got keywords, right? Since I do a lot of the marketing stuff too, you're trying to hit a keyword, right? People like market sell off in tech. So now they're hitting a headline, right? So that's the way it works, because you have to bring in the viewership. And that's the way I have to do it too. I have to bring in the viewership to be able to actually work with people in coaching and the smart folks. And that's really nice. I love working with people one-on-one. I mean, I work with hundreds of people and I get to see the accounts now with a lot of people. And that's really where I've learned a lot of things over the years, is just seeing everybody's trades and how they trade. And Walmart, ooh, I liked Walmart this last week. So this one's not good. I didn't get in it, but I like it at this level. This is the level I was watching. So this concerns me a little bit on Walmart. It got back up and it sold off. So that's not good from a Walmart perspective. But you can see why, it was super clean, but I didn't get in it because I was already fully allocated. I had too many positions on. So I said, you know what, let me just pass this one right now. And maybe I'll get in it later. But it was moving well on the down market, and now it's selling off. It came in right here, and that's not good. So, you got volume bars here. So we'll see if it comes back right here. It should be okay. If it gets a 135 and holds, I'll probably nibble on it because I have more cash now, All right, we'll set an alert. Let's just do a quick 10-day one just because I want to be in it earlier. Thank you for giving some insights into media. Yeah, the media, like 9 times out of 10, you don't want to watch the media. In fact, like I did a news thing. Was it YouTube, my Traders Fly? So I did a video right here. What is it? This one right here. So even though I did this, Pete, CNBC, I did a quick analysis on it, this video. So what I do is I have another computer. Actually, I have 3 computers here running. So each one's very similar. This one's for filming, one's for trading, the other one's for recording. So this one right here, I basically just run it for the news for you guys. I recorded it. And then what I did was to skim to find an option segment and see what they said. And then I made a video on it. But as far as watching the news, no, it's not worth it because it plays with your mind. On what do you do with the position? What do you do with the trade? Because if you watch this video, you're going to learn a lot of like the thinking process, because the way they talk about things, it's not, like I said, the guy I learned a lot from as well is Dan Sheridan, who taught Pete and John Nigerian. They worked in the pit together. So anyway, what you'll notice is as I break down the video, they don't talk about it if you're a short-term investor, long-term investor, how your portfolio is allocated, your risk tolerance. They just don't have the time and luxury to get into that. They're just trying to hit a bunch of topics all the time, and it's a tough game because everybody's risk levels are different. So if you critically think about it, that's how you can get into the deeper minds and get people to start thinking on their own, because that's in the end what you're trying to do. And it's a tough business for people to think. Most people want a feed-based website. Tell me what to trade. Tell me how to trade it. I got some requests as well from other YouTube people and promoters saying, hey, can you join my community and be a teacher on my community? Because a lot of my members are losing money. And I'm like, yeah, they are. Because I looked at the video and I'm like, yeah, they are. Because it's just like, trade this, trade that, trade that. And it's like, you can't do it. All right, William, I keep promoting you to the other 2 live feeds I watch and they don't like that, but by far you're the most informative than any of them. Yeah, I mean, everybody's got their scope and channel. Unfortunately, a lot of the things that I do, they're more educational based and not like hype and pump and stuff. So it's maybe not as entertaining, right? If you try to promote education, because I'm a huge proponent of education, if you try to promote education, it's a little bit more of a dull subject. Not a lot of people want to put the work into it. Let's just be honest. People just want an ATM machine. They want to tell me what to trade. That people even email me asking me, can you manage my account for me? Eventually, like, tell me what to trade. Then why don't you do it? Right? So eventually it gets to that level. And that's what they want. They just want an ATM machine. And yeah, unfortunately, that's where most people are at with trading. So for me, I pick up usually the people who are more motivated to actually learn and work. And that's why, like, a lot of the coaching that I deal with, some of the mentoring stuff, they last like 6 months. If you watch any of the interviews, I work with people like 4 to 6 months, and some people go like a second year even. I got a set and learn on Home Depot. This one was moving way too well this last week or two. The last couple months it's been moving way too well. I traded it quite a lot, but then at earnings I kind of stopped, and with the market getting toppy. But I got to set an alert again once it starts kind of calming down. Pfizer's doing way too well. I like it. I like it, but scared to get in it because this thing is like shooting up. And I already got Moderna stuff, so I really can't. I got to stick to the same thing over and over again. If I flip-flop, then by the time I flip-flop, because here's the issue, if I flip-flop to this one, then this one starts rolling over and my Moderna will start going up, so I can't flip-flop. You got to stick to the same thing over and over again, right? Whether you're doing iron condor, same thing, just tweak it a little bit, right? So same thing here, same vehicle, same strategy, pretty much. Tweak the strategy as needed due to conditions, but overall same thing over and over again. All right, Johnson saying this thing exploded. I didn't get it. TZA. Okay, what else we got? This is Toast, Under Armour. Okay, so yeah, Johnson & Johnson's very nice. I mean, I do like it. Let's put it in that growth one because I didn't put that in. And Pfizer for sure. Just because I missed this in Home Depot. I do like it. If it can calm down a bit, it can actually work out pretty well. Lowe's as well. Let's see what Lowe's is. Pretty similar, yeah. Yep. So that's good. Okay. We're getting close to, let's go back to Home Depot here. Pfizer, where were we? See, there's that Citigroup, the banks. Nah. They're acting a little weak today. Leonard Campbell's Soup, always a good safe play. I did like a 50-50 strategy on Campbell's Soup. What was it? Like around here. Thankfully, it finally paid off eventually. It took me like a little bit to stay in it. I got smoked for a little bit, but then it paid off. And then I was like, that was a annoying stock to deal with. What about PepsiCo, Coke? Yeah, Pep. Yeah, I mean, this one's nice. I mean, these are nice safety plays. The pullback, like these types of pullbacks actually are fairly, what is this, earnings? Pep, let me see, what do we have here? Because this one doesn't show the earnings after it's released now. You've got the dividend here. So it's just a normal pullback. Okay, so these are actually good buying, dipping opportunities, usually, unless it really starts to become a negative market. One concern here for me is some of this. rising selling pressure is not always great, because what you sometimes see is the big money getting out at certain high peaks, because they're smart like that. The way the big money works is they actually trade not the way that you guys trade or I trade. The way that the bigger money, I'm talking about huge institutions, like huge multi-billion dollars, because they have other people's money right behind them. So the way that they work is, we as regular retail traders, we try to buy a price and then sell at higher prices, right? What they do is they move and manipulate the stock, and they have to manipulate it because they're just too big. It's like a big cruise line. It just pushes all the boats aside. So for them, it's a game of not like buy low and sell high, because they're moving the stock, right? For us, it's like buy low, sell high, or sell high, buy low. Whether you're doing options, again, you're buying low, selling high. Their game is a little different. They have to look at, if you ever look at the way that if you ever get a back seat, which is probably rare for most people, but if you really look at it, and one of my guys was showing me an insight to this, and the way that it works is that you're really dealing with the liquidity, and you're trying to manipulate the stock enough to where you might unload, or let's say you buy up, let's say $100 million worth or $50 million to move that stock higher. And now you got regular retail guys coming in saying, oh, this stock's going up. Oh, it's breaking a little trend line. And it'll start grinding higher. And what they do is they bought up 50 million, but what they'll start, once you start buying into it, what they'll do is they'll dump 70 million. So they bought 50, but they're dumping 70. So net, they're actually dumping 20 by manipulating the price slowly throughout a couple of weeks or even a month. And this is what happens. And they have to do that over spread of a couple of weeks or months, or maybe, a longer time period. And this is, when I look at PepsiCo, stuff like this is a little concerning, but it's not too bad. Normally the trend is nice. So this can actually come back to 165 and be fine. But looking from a bigger institution point of view, that's the way that it works. There's 165. So we'll see if it comes back and bounces. I like it from that perspective. It's still fine and healthy until you get some serious negative signals. Let's look at Coca-Cola. Yeah, it's a little spread for me, too high. I would wait for a little pullback. You're kind of right at there. Not saying it can't go higher, but I don't like chasing. This is too many gaps. Gap. Very nice, but gap. Very nicely spread though. Let's look at the monthly. Yeah, if this breaks here, this is where I would get in, right here. Right about, I could set an alert right here, right around 60. All right, I'll set one right now. So there we go. So that's kind of, you could nibble a little now, anticipating things, but why bother? It's already so far stretched. It might pull back. It might take like 3 months for that to go. So just let that alert sit there. Let it do its thing. I think I was on Home Depot. And then a little bit later after that, Bank of America. So Caterpillar, I always like trading Caterpillar, but it's kind of not been doing much. JP Morgan, Procter & Gamble did really well this last couple weeks. So here, this one right here, yeah, nice run. Pullback would be probably a buying opportunity on this one for sure. It's like Johnson & Johnson. It's got a clean-cut breakout across a year here, so and it's a safe play, so people are definitely getting into a safer play. So a lot of toilet paper for sale, a lot of that kind of stuff. What about those? What those gaps represent? So anytime there's a gap, let's see, where was it? Coca-Cola. So when you have a gap like these types of gaps, like an empty price region, think of it like how do I explain this? Let's go like this. Let's go to staircase building. So what a gap does is when I look at let's go to an apartment building. Okay, so here's what a gap does. Okay, so if you look at a building, let's pull one up. I guess this one. Okay, so if I go into a building right here, it's kind of like one floor here. And then what happens is we jump up to this floor, and then again, price moved around in here, and then we jumped again here. So when price starts coming down, normally what you have is you have this next level to kind of catch you. Like let's say you fell down the stairs. Well, if you fell down the stairs, you're thankful, thank God, or thank whoever you're thanking, you got that floor right there at the lower level. With a gap, you don't have that. So you dive from here to here. That is a hard hit, which means there's no support there. There's not enough buyers there. There's no buyers to take that stock, that want that stock, to buy more of it. So what happens is the gaps, they usually fill. So they go through here and then they suck it in and it sucks down. It just like falls down, right? So in the same way that it can suck it to the upside, right? It's like a balloon or something like that. It just sucks it to the upside. But here, if it starts selling off, and again, now you get to this next gap, it might trade around here. Oh, I'm falling. And then all of a sudden it gets in there and then there's no buyers, no support. Boom, it'll drop again. So that's where the gaps can become a little dangerous. Oftentimes gaps do get filled. There's a couple areas when gaps don't get filled if it's like too far away from the price, like in terms of like just way above. Also, if it's too far away from in terms of time, because there's a lot of distribution that's already happened, a lot of digestion, or the company gets acquired, is kind of another reason when the gap does not get filled. So I hope that helps, Joel. It's kind of what you're really looking at. So yeah, so that's kind of the gap problem. Let's see, McDonald's. I'm going to look at a last couple few that I kind of wanted to peek myself. Coin, it's not doing anything. Let's set an alert. I know this one's popular from the crypto stuff. Everybody tells me, why don't you do crypto? Because, well, you don't need to. And then the other one, McDonald's. This one's been doing fairly well. I'm going to add this one to possible growth. Okay, at what time frame usually a gap occurs? Usually you'll see a lot of them on the daily. Like look at this one right here. There's a gap here. So you'll see them on the daily. There are, you know, like here's another one right here. So you see them on the daily more often. I mean, you could happen on any time frame really, but I mean, it happens from one day to the next, right? So it's a daily gap usually. That's what you're looking at. So here, like you'll see a gap down, like that's a fast market move, right? So it's just when it gaps down, when you see a stock gapping down, you better watch out, you know? So like here, it gap down, but then it snaps back to fill the gap. Like it's so fascinating, right? It gets right into it. So yeah, they suck right into it. So if you notice and study some of the gaps, like it doesn't happen all the time perfectly and clean cut, but a lot of times it'll fill right into it. Like look at this right here. It gets right into the gap. It sucks right into it. Like look at this. Kraft, Heinz, ketchup. There's your gap. Right there. We fill right into it and we reject it. And there's the gap. So again, technical analysis, just to wrap these things up, because I'm going to kind of, you know, I've been going for an hour now. It's not perfect. Technical analysis is not perfect. It's not 100%. It is statistical in nature and it's pattern recognition. Just like when you play chess, you play checkers, you look at drawing by numbers, you look at anything. It's statistical in nature. So you're looking for patterns that repeat. Now, sometimes those patterns only work like 70% of the time. Now, 70% of the time is still pretty good. So if you lose like 30, 40% of the time, the other times, that's okay. Now, you could actually have the other way that people say, well, you got to still find 70%. No, you have people that, you know, win only 40% of the time. I've seen people that win 20% of the time and still do great in trading. Why is it? Well, because the way that they stop out and position manage is very good, because just because you stop out, you could keep stopping out, and then eventually when it starts working and you hit it hard, it makes up for all those other stops or all the other issues that you've had. So just understand that you could still have a low success rate, but still do fine as long as you manage, because this business is about money management, risk management, right? So if you get stopped out, but you're only trading, let's say 5 shares, but then when it finally works, all of a sudden that 5 shares and you start going, okay, well, I'm going to just go like, 50. I'm going to 10x it real quick. And now it starts running. You're like, boom, I'm good. That 5 shares was just a cushion and a probe. It's kind of like a pilot position, as they say, like probing, just to have something that you're keeping on your radar. And that's what I do. Like with Zoom today, I put on, what I do, 2 or 3 or 5 contracts, something small, simple, just to put something on the radar. And now I'm like, let's see if it gets followed through over the next day or two. Because now if it gets into this like 210, I'll probably start adding more and more pretty quickly. Because the volume was there, it was starting to pick up. And this was my pretty much only new position today. That's why I'm talking about it. So if it starts coming in over the next couple of days, I'll probably start adding to it very quickly, and it's fine. But if it doesn't work out, I'm just risking up to this point a little bit, right around 170, given that room to be able to be stopped out. Because you got to give it that wiggle room, but I'm risking less, because if I'm starting to get into like 20 contracts, 40 contracts, if you're starting to get bigger and bigger and bigger, then you don't want to put that in all at once. Like, why would I do that all at once? Like, if you see the way I trade, I do one lot. What I'll do is I'll put in one contract, like let's say the spread is trading at 250. I'll put in positions at 245, 240, 230, 220, like if the stock really starts tanking at $2 and then like 190, which more than likely these will not even get filled. But for the day, I might do that spread, even though the price is at 250, and I'll get like one contract here. And then what I'll do is I'll start spreading, like, you know, a couple here, a couple here. And sometimes the stock pulls back and I'll get filled like one or two more kind of contracts. But a lot of times if they keep running, then I'm like, you know, what they'll do is they'll run, then they'll dip, and then this one, the 240, might get filled, and then they'll keep running, and I'm not at the computer, but I know I'm trying to accumulate, right? So it's kind of like I'm waiting for that price to come back. But if it doesn't get filled and my 250 spread I paid 250 keeps running, then that one becomes profitable, and I'm okay with that too. So I just kind of have those orders in the queue. Just if you were curious how to do that, like this is what it is. Like, let's say I'm doing PepsiCo. Actually, I knew a guy maybe 15 years ago worked at PepsiCo. But let's say I'm doing a spread like at the 63 days right here. Not saying I go out 63 all the time, but let's just use that as a guideline. So this spread is trading at $2.88. Okay, so what I'll do is I'll go ahead, analyze. So, okay, so there I've got my spread. Okay, so I might put in one at 285, one at, and again, depending on how quickly you want to get filled, one at 280. If I start seeing they get filled very quickly and the stock's pulling back, I might tweak the positions very quickly. 270, then I'll say, okay, at that level, I'll start getting, you know, it's a rough guess because it's for the day. If I really want to be more precise, then, you know, that's a different story. Then I might say 265, and then maybe like one for like 250. Right? So this one's like, hey, if it really dips, yeah, I'll take it. But if, you know, otherwise I'm kind of playing like two in that range, and I just send that in, right? So you kind of, boom, send that in, send all these in right here, and you can do them like that. You could also do it from the trade screen, like blast all if you want, which is also the same thing. Like over here, you could switch it to blast all. So this is another way. Oops, not analyze. Then we create a duplicate order. So you just create duplicate order, and then what you can do is just confirm and send. And let's just do like this one at 150. Let's just do these at like $1, just so you can see the difference. 170, and this one's at like 190. Okay, so I'll just confirm and send. You can see all your orders right there. Boom, blast all. And now you got all these working orders. Chances are the ones at $1.60 here are not going to get filled anyway. But if it does, great, cool. By happenstance, somebody might put in a market order and I'm the only one there. They have to go through me now. They have to go through me. So then, boom, there it is. If it's at appropriate price. But if they're doing a market order, boom, there it is. I got one. So it's by luck of the draw. Sometimes it happens. And then other times I'm kind of playing in this region. Then what I might see is I get one triggered like, you know, 10 o'clock, and then another one's like at 2 o'clock, another one's at like 2:30, 2:12, another one maybe at the end of the day. I don't know. It just depends on how the price is moving. But it's just kind of a way to kind of start building a position. And then the next day you might say, okay, I'm trying to get about 2 or 3 accumulating. If it's still moving well, okay, maybe I'll get another 2, then I'll get another 2 or 5, and if it's really moving, okay, let me try and get like 10 or 20. Like I'll try to, and I might bump this up instead of 1 contract, so I'll start doing like 2s or 5s. If I need to get in quicker, right? So, because that's just a lot of orders to kind of manage. So, hope that makes sense. Anyway, I hope this helped you guys and you enjoyed it. I got some stocks here to talk about for next week. I'm going to make some more videos for the critical chart channel there, which I've kind of been starting to do more stock independent evaluation. If you really look at that channel, it's been more independent, like evaluation for individual stocks and names. So if you like that, let me know. But I find like a lot of people are looking for ticker symbols, right? Specific ticker symbols. So I'll probably do more of those after January. I'll do a handful here, but we got holidays coming up. So maybe after the holidays, we'll do some more ticker symbols. And I'm going to do the same thing with options when I have everything set up accordingly. So right now we're doing the critical charts with basically the technical analysis. And then later on the Traders Fly channel, we'll be doing this type of stuff, but not on the charts. We'll be doing option trades and examples, but that'll have to be during the day as different trade strategies and examples if I get the time and energy for that. So we'll see. It might be just like one trade here and there per week or every couple of days. We'll see. But it'll be specific. It'll be like, Apple, Iron Condor, setup, idea, or strategy or something like that. So we'll see. We'll go from there kind of and take it as we go. Anyway, join the Discord group if you like. It's free. We can pull questions from there in the future. There'll be a link in the description eventually, or check one of the other videos. You can also grab some freebies on the website. If you haven't picked up any up, you can join the newsletter list. That way you get notified when I release other live streams and events. And then as for next week or two, enjoy your holidays. If I don't hear from you, we'll see how my schedule goes. I'll probably, if I do any live streams, it'll be last minute. Usually it's evening time around this time because the kids are in bed, everybody's in bed, and I get my time to kind of chill out. And this is my chill out time. And then for another hour or so, maybe call my mom here for a little bit and then call it a night. So anyways, enjoy the night. Thanks for joining me and have a good one. All right. Take care.